All right, let's talk about Walmart. Retail Walmart stock tumbling almost 5% today, despite raising guidance for the year. The big box retailer did acknowledge tariff costs are starting to rise. By the way, first EPS miss, he said, in 3 years. I just threw them all in. One of them is going to be right. Let's bring in now former Walmart U.S. CEO Bill Simon for reaction. He's now on the board of Darden Restaurants. He is the chairman of Hanes Brands. Bill, glad to have you on. It was a miss. First miss in 3 years. You have the tariffs out there as well. And the weirdest thing about the quarter, and maybe you could address this, was these huge insurance costs for disability and other claims. How do we read the quarter?
It was about as good a quarter as any retailer could have in any environment, never mind.
Market didn't think so.
Environment. Yeah. I mean, look, if you liked them yesterday, I don't know why you don't love them today. Top line's growing. They're expanding their margin. Look, they felt good enough about their business to, buy back another $1.6 billion on top of the $4 billion they bought back last quarter. They are really hitting it on all cylinders. I don't get the decline in the market today at all.
How do we read the tariff issue, and how do we read this one-time insurance claim issue? I know it sounds a bit wonky, called WBI, wonky but important. We talked about it on Power Lunch today. It wasn't immaterial. It's a big deal for Walmart.
Everything at Walmart's a big number, and periodically they go through and reassess the insurance rates and the accruals that they have to make. And it sounds like it was one of those type of adjustments. It's a big number, but it's a one-time adjustment. It's not a systemic issue. It'll be adjusted, and they'll be reporting that. And the fact that they raised their guidance for the year, or they think they raised their guidance for the year, they're not concerned about it at all. As far as the tariffs go, there's no tariff impact in that business. Inflation is 1%. There's price increases, and there'll be item level price increases as items get tariffed. But, about 2/3 of what they sell is domestic anyway. A lot of it's food, and that's the high velocity stuff where the tariffs are going to bleed into the business. I think it gets absorbed either by the manufacturer. Walmart's clearly got room to absorb some. They were up 26 basis points in the U.S. in margin this quarter on top of 40 last quarter. So they've built some in for the year. They're not worried about it, or they wouldn't have held their guidance.
Bill, it's Karen. Thanks for being on. I agree with you. I thought the quarter was great. I thought the call was great. I'm long the stock. I think it was just expensive going in. But listening to the call, I thought that call was pretty bad for Target. It seems like they are the donor of market share, and I wondered what your take is on Target.
Well, Target's the reciprocal of Walmart. Walmart's got 70% of their product because of the real heavy food mix. 70% of their products are domestic and then not subjected to tariff. And if you look at Target's report, their margin was down 100 basis points where Walmart's was up. And so Target has the impact of tariffs on their business, and they don't have the food business and the velocity to be able to offset that. They got a pretty steep challenge ahead of them in this environment.
Bill, what did you make of the Target announcement, bringing an insider as the next CEO? The market, I don't think that stock sold off on the back of the quarter as much as it sold off on the fact that you're just bringing somebody in internally to probably do exactly what's been done over the last few years. Thoughts on that?
Yeah, I think that's probably the fear. I don't know him well, but his reputation is quite a good operator. The fact that Brian's going to stay, I think he's staying as executive chair, or he's going to stay, keep his role on the board. I think people who don't love Target would probably not see a ton of change coming. It's awful hard to change direction when you were probably the guy that helped get you down that road in the first place, and the architect of it's the chair of the company.
Bill, it's Tim. The gross margin was the one part of this Walmart number that I thought people at least were able to lean into. And I think it was going into the number part of a big focus because they were going to use kind of retail inventory accounting and blah, blah, blah. The whole story, though, for Walmart over the last 2 years or 3 years of re-rating has been about margin, has been about where tech and digital and DTC, well, e-commerce has been a big driver of margin. Just thoughts on this? And again, is this an opportunity? Because there's the gross margin profile and trend is quite good.
You can't really underestimate. I can't really even overstate. I don't even know the way to communicate it. The benefit to the P&L that sales volume, same store sales volume, delivers in operating margin leverage for Walmart. The fixed cost base that they have is enormous. But when you start jamming through 4 and 4.5% same store sales through that operating model, the supply chain efficiencies, the retail operating efficiencies just sheds money. If they could keep those top lines going, and that's their forecast, they're going to be just a bear of a company.